Hello all, welcome back to our channel. So students, in this video we are discussing advanced accounting unit number 3 theory questions. Okay, so this is my handwritten notes ma. In this video the complete unit number 3 theory explanation I will do, where you can easily score 16 marks weightage, means one long and one short question you will able to attempt it by watching this video. Okay, the complete concept you will easily understand ma. Okay, so this handwritten notes PDF will be available in our Telegram group. All the links I have mentioned in the description box. If you are having any doubts, if you want to communicate with me, you can DM us in my Instagram account. That link also I have given in the description box. And this notes PDF is completely free of cost. You will get it for free ma. Okay. So first question is, define debenture, explain its features, types, advantages and disadvantages. From unit number 3, if they are giving the question from theory, means we can expect the topic about debenture. So whatever the topic, whatever the question they are asking about debenture, so this meaning and this example is fixed. So from here to here this is fixed. So what is mean by debenture? Okay, easy way we will understand it. Okay, a debenture is a type of loan taken by a company from the public, means company is taking certain amount from the public. Okay, when people buy debenture, they are lending money, means they are giving loan money to the company. Okay, we are giving loan money to the company, and company promise to pay back with interest after some time, and company will promise to pay our amount with the interest also. For example, if a company is asking 1 lakh rupees, see here I have given an example to understand in an easy way. If a company issues 1 lakh rupee debenture at 10% interest, how much interest they are saying? 10%. It means the company borrows 1 lakh rupee and pays 10% interest every year. For example, if I am giving money to the company, every year I will get 10% rupees commission. After the duration, I will get back my 1 lakh rupee also. Till that time, I will receive 10% interest. So, if the company is taking money from the public, okay, and promises to repay the amount on a certain period, is called debenture. I hope that you understood the meaning of the debenture ma. Okay, now what is the features of debenture? First one is written document. When a company is taking any amount from the public, definitely the written document is must and should. So this is the side headings ma. Inside the matter you need to write it by your own in the examination, like around written document. The written document is nothing about the company will gives the written document whichever the amount they are taking from the public. So like this you need to write the meaning inside the matter by your own. Next one, repayment. So after certain duration the company will repay the amount. Next, fixed interest. If 10% is they are saying, means 10% is fixed for first year, second year, third year, like that till the duration. And no voting rights. The customers, the public will not have any voting rights, and transferable, and your shares will be transferable. Your debenture can be transferable. For example, I have bought debenture for a company. After certain period, I will transfer this to my friend also. So it is transferable. Next, creditors will be there. Creditors is the person who gives money. Okay. Next is secured. Debenture is a secured amount where you will get your interest also. It is an income source. Long-term source of finance. Whatever the finance you are getting, whatever the interest you are getting, so it is a long-term. Okay, like 5 years, 10 years, like that. Okay, next, fixed income will be there. So these are the features of debentures. Okay, compulsory important question ma. Okay, next they have asked types of debentures. So in this, what is the first type you are having? Secured debenture. Secured debenture is nothing about these are backed by the company asset as security. Means the security debenture is nothing about whatever the company assets is there, they will keep as a security. Okay, so if the company fails to pay, holder can claim the assets. For example, I am the company, you are the public. I am taking 1 lakh rupee from you and I am giving my scale to you as my asset. If I have unable to repay your amount, means you can take my asset. So that is called secured debenture. It is a one type of debenture. Next one, unsecured debenture. Unsecured debenture is nothing about you are not having any security. With the help of company's promise, you can take it. So this is called unsecured debenture. Next you are having my registered debenture. Registered debenture is nothing about the debenture where company is registered. Okay, so where company is registered, if you want to transfer your debenture, means you need to inform the prior information to company. Okay, so they can be transferred only after informing the company. Next one, convertible debentures. Convertible debenture is nothing about your debentures can be converted into equity shares after some time. Okay, after reaching the fixed amount of time, your debentures can be converted into equity shares. Next one, redeemable debenture. Redeemable debenture is nothing about the company will pay your amount after a fixed time. For example, I will pay your amount after 3 months. So that is called redeemable debenture. Okay, so next you are having participating debenture. Participating debenture is nothing about public will have the right to participate in the company's profit. Means they will get the interest, along with that they will get the extra profit also. They will get their interest, they will get their amount, along with that they will get the extra profit also. That is called participating debenture. It is also one of the type. Next one, non-participating debenture. Non-participating debenture is nothing about whatever the agreed interest is there, only that will come and not extra factor, and no extra profit will be shared to the public. Okay, if I have asked you to if we have agreed to give the 10% interest, that much only I will give. I will not share my profit, I will not share my loss. So that is called non-participating debenture. Clear ma? Next important is advantages. What are the advantages of the debentures? First one is trading advantage. With the help of debenture you can trading. Means you can transfer your shares to one person to another person. It can be easy to raise funds. To increase your funds with the help of debenture, it is easy. And for investors this is a less risk, because whatever the amount you are giving, every time you are getting the interest also. Yes, it is an advantage only. Next, tax benefit. So tax comparatively, it is having the less tax. You can easily extend their business. So that is the main advantage. And no ownership dilution, means your ownership will not get diluted. So it is a fixed ownership you are having. So it is also one of the main advantage. And fixed source of income. For example, 10% means 10,000. So every year you are getting 10,000 fixed source of income you are having. Okay, either if company is facing loss also, they will give you 10,000. If company is getting extra profit also, they will give you your opinion. That is called fixed source. Next one, regular interest. Whatever the regular interest we are having, 10% or 5%, that is the same. Okay, then what are the disadvantages of this? So there are certain disadvantages for these debentures. First one is security issue, because we will not have security. Sometimes company will fail to repay the amount. Next, financial risk. If the company is facing too much loss, they can't give you the your amount. So that is the financial risk you are having. Next, no voting rights. The public will not have their voting rights. No, so that is also one of the main important disadvantage, and it will be affecting on your credit rating also. And whatever the repayment obligation is there, it will become like a difficult way to understand that. And the last one is fixed interest burden. For example, if a company is facing too much loss, also they should give their fixed amount of debenture to the public. So that time this is one of the main disadvantage. Okay, so this is the first important question related to the debenture topic. If you are finding debenture in the question, this is the answer, you need to write it. Second important is differences between shares and debentures. So this is the differences answer, important question. What is mean by shares? Shares is considered as the owned capital. It is the debt capital, means you are taking the debt from the public. Debenture, share is nothing about own capital, your own money. What is the nature of shares? It is irredeemable in nature. You can't repay that. But here debenture should be repaid to the public, no? So that is the minimum. Here in this we will use long term in the shares, but here it is long term as well as the short term, like medium term also we will use it in the debentures. Next, financial position, good financial position will be there. Here low financial position will be there. Okay, so on shares what we will give? Dividends. On debentures what we will give? Interest. Shares will get dividends, interest will debentures will get interest. Okay, so shares will have the voting rights, debentures will not have the voting rights. So time of payment, after company earning profit, when the company earns profit, that time payment will be done. But here if the company is getting profit or company is getting loss, but time you need to repay your amount to the public. So this is the differences answer, easy answer. Sometimes they will ask for 4 marks also, ma. Okay, and the last important question is about the bonus shares. Okay, so what is mean by bonus shares and what are the various sources to give the bonus? What are the various sources, from which sources you are getting the bonus? So bonus shares is nothing about the free shares. It is free shares which is given by the company to its holders. Means company is giving extra free cost of shares to the existing shareholders. Okay, so it is like a gift or a reward. Okay, it is like a gift or a reward to the shareholders instead of giving them in the cash dividends. Instead of giving them in the cash, if they are giving the extra shares, means extra fee shares, means that is called bonus shares. For example, if a shareholder has 100 shares, okay, and the company declares 1:1 bonus shares, means extra 100 rupees will get for each and every person in the organization. In short, bonus shares is equal to free shares given by company profit to the existing holders. To the existing holders, the company is giving certain profit in the form of shares is called bonus shares. Clear? So to give this bonus shares, what are the various sources you are getting? From where you can give this bonus shares? First one is free reserves. Free reserves is nothing about previous year profits of the organization will be there, no ma. The company will have the old year profit, no. From that you can give the bonus shares to the employees. This is the first source, ma. Second is securities premium account. Securities premium account is nothing about the face value of shares. Okay, so the face value of shares means extra amount which the company is receiving, from that also they can give the bonus shares. Next one, capital redemption reserve. Capital redemption reserve is nothing about the after redeemable the price of the issues bonus shares, whatever the existing balance will be there, according to that they will give the bonus shares. So that is called capital redemption reserve. And the last one is profit and loss account. Profit and loss account is whatever the profit is undistributed, whatever the profit is not shared, from that they can give the bonus shares. So that is called profit and loss account. So these are the various sources you are having, ma. Next, importance of, that is nothing about the advantages of bonus shares. What is the advantage? It is free of cost. Okay, and increasing ownership. When the bonus shares is given, your ownership will get increases and high market value you will get for your organization. It will increase your brand image or market image, yes, and it will conserve some more cash and cash. Okay, and new investors, it will create a new investor so that you can increase your develop your organization. These are the advantages, ma. Next you are having the disadvantages of bonus shares. So when you are giving the disadvantages, when you are giving the bonus shares, you are having no cash benefit. You will not, in return you will not receive anything, no. So that is the disadvantage or the limitation. Next one, reduction in earnings. When you give the bonus shares, automatically your earnings will get reduced. So there is a reduction only. Next one, it will mislead the investors. It will mislead or misguide the investors. So that is also one of the main disadvantage, and it is not suitable for large scale organization, for large companies, for big companies. This bonus shares concept is not suitable. And the last one is future burden. When you are giving bonus shares right now, in future you will get so much burden. So that is also one of the major disadvantages of bonus shares. Clear ma? So this is the complete unit number 3 theory explanation. I hope that you have understood my explanation. If you have understood, just let me know in the comment section ma. And this notes PDF is available in our Telegram group for free of cost. Clear? If you're having any doubts related to your studies, DM me on my Instagram account. I have given all the links in the description box only. Okay, so let me know in the comment section whether you have understood this chapter or not. So all the very best for your examination as well as your preparation. See you all in next video. Bye bye students.